fundamentals of trading are more important than the complex strategies and concepts that you'll learn later in your trading career. The fundamentals of Forex are going to be the legs of your trading career. So you want to make sure that you have the best structure possible. That way you'll provide yourself the tools you need to be a profitable trader. So something as simple as support and resistance can and will make the difference between a profitable and a non-profitable trader. So today, let's go over how to efficiently place your support resistance line. Let's get right into the chart. So I'm going to show you now how to efficiently place support and resistance lines. But first, let's go over some of the few ways that I see people placing them wrong. And this is actually a very important step to learning because I'm going to tell you why this can hinder your trading experience by placing it in these wrong ways. We'll give you bad structure to your trading career, and we want to fix that. So the first way I see people placing their support and resistance lines wrong is using the all-time highs and the all-time lows. Obviously, as a beginner trader, this is going to be the first thing that you're doing. You're going to be using these extreme highs and lows because you think that's how support and resistance work. This is the roof. This is the floor. However, it's not going to be a good idea to place them like this because just like in real life, the all-time extremes and the low-time extremes are not very common. The all-time highs and the all-time lows aren't a very common event. So by placing it all the way at the top and all the way at the bottom, you're reducing the amount and the frequency that price will actually touch into these lines. So you're reducing the frequency that you can actually find good setups and that you'll actually see price bounce in between these. It's very uncommon for price to even reach these areas because most of the time traders are looking to take sells before it gets to the all-time highs and buys before it gets to the all-time lows. Most of the time there's actually lower levels that people are targeting first. So as you see, before price even gets to this all-time high, it starts to come into this zone. And this is where you're going to see a lot of selling pressure come into the market. That's more of a beginner thing that I see a lot of my beginner traders messaging me about their support and resistance lines. This is something that I tend to see a lot, and this is how we're going to correct it. But before I show you that, I'm going to show you also another common way. This way isn't necessarily wrong. It's just not as efficient as it could be. Now, the other way is obviously using just the averages that you can see, just eyeballing it yourself. This is a good way to do it. It's not a bad way to do it. However, you are going to hinder yourself of that efficient placement. I'm going to show you in a second. So this is not a bad way to do it. It's a pretty decent way, and it's going to show you a good amount of averages and places that price will tend to bounce around and off of. However, you're going to miss out on that extra edge that's very important as a trader. Now I'm going to show you the most efficient way to place it. But before we get into that as well, I've been trading with Fintur for a little while now, and I will say they are just awesome. If you're looking for a good broker, a reliable broker, somebody that you can trade with an efficient, fast way, I would highly recommend sign up with Fintur. They have some great benefits to offer. If you like Hanko Trade and you want to still trade on MetaTrader, they are able to use the MetaTrader platform. I still love to use it and still enjoy it. Fintur will offer MetaTrader trading for now. So go ahead and sign up. Use my link down in the description below. Now let's get into the most efficient way to place your support and resistance line. The most efficient way to place it isn't by looking at the chart itself, but we want to dig deeper and look at the data because the data is going to tell us what we need to know, and volume, specifically volume, is going to give us what we need to know. And the way we see that is by using the MACD. I absolutely love the MACD. I've been using it for a while now. It has so much to offer. First things first, to add the MACD, you go to the indicators. It's called a moving average convergence divergence. You can add whatever one you want. It doesn't matter. The most important part here is that it shows the histogram, shows the volume. So I actually go ahead and I take off the signal line and the MACD line. I'm just using the histogram here for the volume. It's going to show us the most important highs and lows. What you want to look for is the highs and lows with the most volume. And I'm going to give you the reason why. So first, I'm going to show you what to do. So when you're using your support and resistance lines, you want to mark the lows that have the highest amount of volume, like this one here and like this one here, and the highs that have the most amount of volume, like this one here or this one or this one. So for example, we're going to mark this here, and then we can mark this low here. Boom, boom. This will be a nice support, and then we can look up top and look for a high areas like this, and then we can use this one here. This one has a lot of volume, or even this one right here has quite a bit of volume, so we can mark that there. So up here, this is going to be your resistance areas, and then down below this will be the support areas. The reason you use the highs and lows with the most volume, put it simply in an extreme example, look at it this way. If you have low volume, if there's only, let's say, 5 traders trading just a little bit of money on the chart, the supports and resistances that you'll see be made will be very inaccurate and not very common. They're going to be a little more sporadic because there's only 5 people. All 5 of those people could have different opinions on where they want to place their buys and sells, their limits, where they want to take their profits, where they want to take their entries. So the chart's going to look a little more crazier than if, let's say, you had 1 million traders. There's going to be a little more common ground because as a collective, we all kind of have a similar opinion sometimes on where the supports and where the resistances are. So when you have those levels and these highs with super high volume, this is going to show a more accurate area where when price has a high amount of volume, you're going to see price create a more common support and a more common resistance. So for example, like we have this extreme amount of volume coming in here, and it makes a hard stop, as you can see right here. And if you go back in time and you see just how perfect the support and resistance is on this level, like here, as you can see, we have price come, just tap into it with a good amount of volume here too. Price comes back, takes a nice little seat there. This one comes straight through, taps back into it, breaks above, comes back, taps into the line again, taps into it here, and then makes a nice little support on it here. And then later in the future, could even continue to still use this support level here. And the same thing goes for up top here. Obviously, the most extreme volume that we had come in on a high was up here, but here we haven't really seen price do too much off of that yet. And like I said, that's because this is also the extreme high on the chart. So you want to look out for that too. And you want to make sure you're kind of avoiding the all-time highs of the chart. So let's find an area within here that we have a lot of volume coming in. So here, this is a low amount of volume. This here is a pretty good high amount of volume. So if we go ahead and place it here, as we can see, price respects this resistance quite a bit. Here we had a fake out. Here we had price come above, interact with it here, and tap again, tap again, tap again. So as you can see, it's very important to place your resistance and support lines where the more higher volume was on the MACD, because that will show you the most impactful and collective common areas where people are going to see their support and resistance and take their buys and their sells. So now, just as a bonus, I'm going to show you this live because it's easy to sit here and say, oh, look how perfect this looks. But more important to see how this actually works live so you can see for yourself. And just as a bonus, I'm also going to show you how this works in crypto as well. I know a lot of people are getting into crypto now and would like to apply these to Bitcoin and Ethereum, some of those other cryptocurrencies. So I'm going to show you that as well. But let's show you it live first. Okay, so you take a random pair like Euro JPY here. Just like to scroll back and do replay mode. And like I said, you want to straight away look for the areas with, let's say we want to set some resistances first. Let's look at these highs here. Obviously not the all-time high, but let's see where the extreme amounts of volume came in. We had a lot of volume here, so that's a good area to set it. Let's go down below. Let's look at some areas with extreme volume. We had quite a bit of extreme volume coming right here. And we could just place those two right away. And let's see exactly just how good this price will interact with these zones. I let the the trend play out a bit just so you guys can see. Fast forward it a bit. And as you can see, price interacts off this quite a bit. We have it tap into here, come up here, fell into these lines here. And then as you can see, it taps in there, comes below, taps up top, using it as a resistance here, supports a little bit there. And then as you can see, continues to use it as resistance here. So, if you're looking to obviously take sells, looking in these areas will be pretty profitable for you. And like I said, just as a bonus, let's hop over. Let's go to even Bitcoin. We'll show you here. It works the same on Bitcoin. Like I said, can use replay mode here. Let's just jump back a random time like that. And let's use some extreme levels of support and resistance. Let's see, we had quite a major low here. As you can see, using that, but it looks like we're moving up. So let's look for a little bit of a resistance line, some extreme high areas like here. This had a lot of volume come in here, so I just placed it up top. See something in here maybe. This is a lot of volume off this one. We'll let this play out. So as you can already see, price came up and just perfectly tapped off this line that I marked here from this extreme amount of volume. As you can see right here, or sorry, it was right here. This extreme higher amount of volume on this high that I marked here. As you can see, price then came up and tapped in this line and sold off of it. So I let it play through it a little bit longer too. And then just so as we can see here, price coming back, taps into it, uses it as a support here for quite a bit, eventually breaking through, resisting, and then once again breaking through, resisting, and then finally using it as a nice support before launching off. So this way will give you a little more accurate, more efficient manner of placing your support and resistance lines. So hopefully you enjoyed this quick video. This will give you the fundamentals of Forex and give you good structure to your trading career. So hopefully you enjoyed this video. If you liked it, please send it a like down below, and I'll see you in the next video.